Welcome to Accountable, where your business is our business. Hosted by David R. Peters.
Hi, everyone. Welcome to Accountable, the podcast for CFOs by a CFO. Hey, my name's Dave. Thank you so much for being with us here today. Hey, I know a lot of you, whenever I'm out doing classes, whenever I'm out teaching and speaking and talking to people, talking to all of you, a good bit of the time I get questions about what it is like to start a business from scratch. So it is certainly not something that is for the faint of heart, I think. And so we have a guest on this episode of Accountable that is going to just kind of talk us through what his experience has been like starting a mortgage business from scratch. So James Goodwillie, who is the founder, I guess co-founder of Brightleaf Mortgage here in Richmond, Virginia. So there is a part of that very much warms my heart, by the way. Okay. I mean, the fact that we are starting businesses here in Richmond, I think that's awesome. And so James and I, this is going to be a lot of fun. I worked with James for a few years at compare.com, and that just feels like forever ago, I think, with the pandemic and everything. But anyway, James Goodwillie has a great story. For those of you that are thinking about going out on your own, if this is a thought that has crossed your mind, this is your episode. Okay. And so, because I will tell you, it is not easy starting a business from scratch. So, James, welcome to Accountable.
Thanks for having me.
So, so this is, again, it was for a lot of folks going out on your own is a little bit of a leap of faith. Mm-hmm. And so I always talk about it as like, there has to be this like tipping point at somewhere along the way, because honestly, going out on your own is crazy. I mean, the statistics are against you.
Oh, yeah.
And so there has to be something that kind of pushes you to actually do it. And I would love to hear from you. What was kind of that thought process, and what kind of made you decide to take that leap?
Yeah, jump overboard.
Yeah.
I think so. Prior to jumping overboard, my whole career was in marketing, right? So
right.
I was at the time running digital marketing for a large mortgage company, national mortgage company, had offices and locations all over the country. And I started to work primarily more with the larger branches, these big players in the mortgage space that were doing a ton of volume, were doing a ton of business, and helping them with their marketing, helping, corporate and them at the same time. And started to kind of learn what they were doing, right? What they were doing good, what they were doing bad.
Right.
And, looked at the money coming in on their side, and looked at the effort that they were putting in. And, a lot of it was sales, and I'm not the best salesman, right? That wasn't any of my specialty for sure. But
well, it wasn't your training.
Right. Yeah, exactly.
Sure.
Exactly. So I kind of looked at it and said, all right, well, if I can get that piece correct, I'm pretty sure I have the rest of the toolbox. And so looked at a bunch of different markets, Richmond primarily, hoping that there was an opening there for kind of what I planned to bring to it, both from like the local side and the marketing side and all that. And there was a giant hole. Nobody was doing a really good job at the time, and on that local side.
Right.
And everybody in the Richmond area in particular was expensive.
Okay.
So, I had no idea how to start a financial company. I had no idea about any of that. Went to Google and just started Googling my way around and figuring out what I needed, and calling the SEC and figuring out what all was needed, and then brought on a friend of mine, colleague of mine, that had the sales side.
Yep.
And we had talked before about, hey, it'd be fun one day to do something together.
Uh-huh.
So, he said, let's do it. And then we embarked on that journey.
So I think that you said a couple of really interesting things there. So first thing is, and I think that this is one of the things. I mean, a lot of the folks that listen to this podcast, they're CPAs. They're not, they're not sales and marketing folks.
Yep.
For those of you that are sales and marketing folks, good for you for listening to this podcast. But so I think that what you said was pretty interesting there, because you said, "Hey, I didn't come from a sales background necessarily. Yep. You were involved in the marketing side, but that wasn't necessarily your sort of talent. I mean, that wasn't sort of how you were wired." But you recognize that. Yep. And he said, okay, how can I bring somebody on who can maybe kind of help me with that? And so you kind of, I think you saw an opening, but you also were smart enough to know that, like, hey, this is something I'm going to need help with.
Yeah, absolutely. That was huge. I think probably one of the best decisions I've made is going that route. Because, while certain things like sales especially is learnable, right? It's just practice and repetition and learning the frameworks and going from there. But it helped a lot to have somebody to kind of fall back on that already had been there, done that, right? So it was also easy for us to kind of go to market quicker, I feel like. Just purely because we had that person that could speak well, that person that could sell the product from day one.
Right.
Whereas, I could sell the product if you knew the product. Like if you knew mortgages, like I could spew for hours on mortgages and the company and the business, or we want to talk about marketing, same thing. But from a elevator pitch standpoint, quick talk to sell the actual product that we created, it was great.
Yeah. So I think that's interesting. The other thing is too, is that I think sometimes a lot of folks, they think, okay, I got to have this really extensive plan. Mm-hmm. And don't get me wrong, folks. Okay, I mean, like, I'm not saying, okay, dive bomb into something without without thinking about it. But I mean, correct me if I'm wrong. It doesn't sound like, though, that you necessarily, built out this sort of, comprehensive business plan necessarily right away. Is that right?
Nope. Yep. Exactly right. It was kind of a build as we went.
Right.
And I think it was a little bit different because it is mortgages. We did have to get, the licensing and everything. So all of that took quite a bit of time. So it was kind of one of those decisions. Let's go ahead and start. Let's get the ball rolling on that licensing while we can start to think about everything else.
Yeah. So needed to get licensed, highly regulated. Mortgage industry is similar, I think, to a lot of financial services. In the sense that, highly regulated industry, licensing is required. So there are some barriers to entry from a regulatory perspective. And also though too, but there's a marketing aspect of it as well, where you have to kind of differentiate yourself. Otherwise people just look at you as being, ABC Mortgage versus Brightleaf versus, some other mortgage company down the block.
Yeah. Yeah, absolutely. That was tough. I think it would be tougher if we didn't go get licensed on March of 2020 when it's a great time to start a mortgage company. Yeah. So when rates were just plummeting, it was a lot more about price than anything at that time. So that would, the hurdle there was a lot easier. But we also, quite honestly, fell back on our lack of industry knowledge. So I knew mortgages. My business partner didn't at all, had no experience, and I had never originated a loan before.
Right.
So it kind of gave us a unique advantage to just accept that and say, hey, we're not the old brick and mortar shop. We're not the long-standing mortgage company that has done everything with huge overheads, and they're paying everybody up the food chain and everything like that, right? So it kind of gave us a unique story as well to fall back on.
So talk about those kind of initial stages. I distinctly remember, after going out on my own, I remember sitting at my kitchen table, like kind of the Monday after I kind of made that decision, and like sitting there thinking to myself, okay, now what?
Yeah.
I mean, is that accurate?
Oh yeah. Yeah. I mean, it's kind of like a million things in your head. And you're like, all right, I need to get all these done, but where? How do, and what? What do I do first? Where do I go first? So, I think it all came down to just making money, right?
Right.
So what's the simplest thing we can sell, and what's the simplest product we can put out there and get somebody to purchase, essentially, right? And
Right.
so that's really what it came down to, and that's what we focused on, just kind of that lowest hanging fruit. Let's not worry too much about the things we want to do a year from now or 2 years from now. Let's just get customers,
Right.
Because that's really all that matters, So
Yeah.
it came down to trying a bunch of different things in order to get customers, and then when one particular thing worked, we kind of kept going and kept pushing that as hard as we could.
Sure. So talk about like getting attention in those early days, because I mean, again, I think, and I'm sure that a lot of folks that are listening right now, they get that, right?
Mm-hmm.
So it's, their accounting firm or their, insurance agency, or, they're an investment advisor or whatever.
Mm-hmm.
And there's a million other, businesses that appear, at least from the outside, to be just like theirs. How do you gain attention? Because I mean, like, especially, you told me that you got licensed in March of 2020.
Mm-hmm.
You're right. I mean, the mortgage rates were helping you out for sure. Mm-hmm. But still, though, people got to know you're there. Otherwise, otherwise you're going to draw nothing.
Yeah, absolutely. I think it's trying to figure out what your biggest selling point is, right? And so for us, we played heavily on that. We're different, right? We're new. We're brand new to this industry, and we've got that lens on that is going to help. The problem is we didn't have the experience. So if you have a bunch of experience, you can sell that experience pretty well, but we didn't have that. So price was our biggest competitor back then. So we knew, hey, we need to, in order to get credibility on the street, right, we have to get people through the door first. So we started taking our comp really low in order to get people in the door. And so, with refinances where they were, we kind of focused on that, as, we knew it was only going to get worse. The pandemic was, more things were gonna happen there. So rates were going to continue to come down, and the economy was going to get hit hard. But people were still going to have their jobs, and for the most part, the white collar workers that were still going to be employed, just working from home.
Right.
So everyone was going to be refinancing, and so we focused on that and cut our comp, and just kind of lived with it for a couple months while we were charging people next to nothing, which just blew everyone else out of the water.
Yep.
And then that snowballed into referrals upon referrals upon referrals upon referrals, which allowed us then to increase that price a little bit more. And kind of be a little steadier with it.
So that's interesting too. So, you used price. I mean, you were competing based on price, and, again, 2020 folks. So, so let's keep that in mind.
Yep.
Kind of at first, but then you use that to kind of build client base. Mm-hmm. Okay. So did you kind of look at that as kind of being, because you just said, hey, I'm going to try to get a client. Mm-hmm. Was that kind of the thing that you had to get in place first, or because I would imagine that there's probably a few things that you look at and you say, all right, I got to have these, couple of things in place first. Otherwise I got nothing.
Yeah. So we had to get lenders, right? We had to get just at least the backbone of the company. So once we got the license, we had to get the company license as well as the individual loan originator licenses for each one of us. And so once we did that, we had to get lenders on board. Uh-huh. And so we signed up a couple lenders, not many at first, just because we'd never originated a loan. So we picked the larger lenders with the easy to use systems just to make it as smooth as possible. Even though they really only did cookie cutter type loans, right? They did super simple stuff. But we didn't know how to do anything, so let's start simple rather than go complex. So we started there, and then once we had a lender, we kind of did like a test loan with one of the lenders and went through it, and didn't really help too much. But then, we just started talking to friends, neighbors, family, some realtors around, and eventually got our first client. And it took us, for something that now takes us 10 minutes, took us hours and hours and hours to do, just to him, my business partner and I on the phone at midnight trying to figure out how to get this thing through. But after we kind of got the backbone of just bare necessities, if you will, we said, all right, let's just get a client. Let's start there. And then snowballed.
I think it's important. I think especially when when you're just getting going on something, to not set sort of these gigantic goals too. I mean, I distinctly remember going out on my own and just thinking to myself, okay, did I make money today?
Yeah.
Did I make $1 today?
Yes.
And if I did, then I did something right.
Right.
If I didn't, then well, I guess there's always tomorrow.
yeah, exactly. It gets infinitely more complex as it grows, but early on, I almost missed those days because it was that simple. It was like, all right, did I bring in money today? Did I get a client through the door? Did I get a loan? Right. And then the rest of it you figure out as it goes. So,
a mentor of mine used to say that the goal. He was a financial advisor. He said that his goal of a first meeting with somebody was to get a second meeting. Mm-hmm. It was not to sell necessarily. It was to get a second meeting. Get somebody to talk to you and keep on talking to you. Mm-hmm. I don't know if you can identify with that or if that's
for sure. Yeah, one of the things we focused on a lot, because a lot of times loan officers they're on the older side, or they're the ultimate salesman, right? They're almost on that used car salesman kind of verge, right?
Okay.
I think, and so they just talk and just try and sell. And so our goal was like, hey, just let us put together a loan estimate for you. That's it. Just let us get to that stage.
Yep.
You can throw it out the door. You can not even respond to the email, but just let us get you one.
Right.
And so the speed that we focused on was, hey, let's just get the basic information. I'm not going to pull your credit. I'm not going to do everything else that everybody else does. I'm going to use the numbers that you have, the numbers you give me. And if all those are correct, then this is what it would be.
Yep.
Just to remove that hurdle, I don't even have to have the conversation with them about, hey, I need to pull your credit. Going to hit you a couple points, right? I don't have to do any of that. And so I think that speed helped us quite a bit early as well.
Well, and also I think probably being helpful too, right? I mean, so, because you offered somebody something that they really could just, take or leave. I mean, the loan estimate is, it's an estimate, right? I mean, so, but it could also be very helpful to them, especially if you're shopping around and you're trying to figure out what to do. I mean, for those of you that haven't had the experience of buying a house out there that happen to be listening to this podcast, that is got to be one of the most intimidating things I think that people go through.
Oh yeah.
For most people, probably the biggest purchase that they ever have.
For sure.
And the paperwork is just mountainous.
Yes, it is.
So something like that, can be very helpful, I think, too. So, putting something in somebody's hands that is going to be helpful, that seemed to give you some mileage.
Yeah, absolutely. And a mentor of mine once told me that, early in a business, it's a lot of times better to get a quick no than a long yes.
Good point.
And so that was kind of our focus, was just let's go fast, try and get clients. If they say no, they say no. Move on to the next one. Keep going. And that was something for me that was hard because I'm not a sales guy. So hearing no's was an entirely different challenge for me. Yeah. But again, another benefit of having somebody who has been there, that was like, no, it doesn't. It's not personal. It's just you got to keep going.
Yeah, let it roll off your back.
Yeah, exactly.
Yeah. Wait, what were some of the unexpected things? Because so we've talked about some things that I think are most people may think to themselves, that kind of makes sense. What were some things where maybe you encountered resistance that maybe you just didn't think about?
Yeah. So a worldwide pandemic, one.
Yeah.
That threw us for a loop, right?
That's one.
The Fed, another.
Yeah.
Going on the backside. So I think with that first one, we knew that rates were going to drop. We didn't know it was going to drop that fast.
Right.
So in our minds, we thought, all right, well, because we were both working full-time jobs at the time.
Yeah.
And so we were kind of doing this part-time. Let's build up some experience, build up some client base, then take the leap of faith. And that came on way faster than we thought because of the rates going the way they were and how cheap we priced. We got a ton of traction. And so it was probably, looking back, too much traction too quick.
Yeah.
Because early on, we wanted to focus on that experience piece, that piece of like, hey, yeah, we are cheaper, but we're not Walmart, right?
Right,
We're Target with Walmart prices, right?
Yeah.
So that's what we were going for. And so we really tried to push that. But because it was just him and I, and then we were juggling jobs, and then we had to leave those jobs and focus on this full time, and we were just getting buried with loans, the experience probably dropped off, which was certainly not a good thing. Looking back, I think it would be, we'd probably have a lot more referrals, a lot stronger base if we were able to move slower, even though it would have taken longer. So it's kind of a rock and a hard place of, we made more money this way, but it probably came at some sort of cost.
I think that on some level, though, I think everybody goes through kind of picking the right clients, right? I mean, I think once you have done something and had some success, it's a lot easier to say no to business. I think when you're first getting started, though, you're just trying to eat, in some cases.
Yep.
And so, I think it's harder for you, to be sort of mindful of what is sort of good business versus maybe not so good business.
Yeah, for sure. And I think that especially now, after seeing how long certain ones take and analyzing like, all right, well, these types of loans and these types of borrowers take longer than these. And this is all the hurdles we have to go through. Definitely now we start looking at that. But, early on, again, lack of experience, didn't know, all right, well, how many loans can each processor handle, right?
Sure.
And then it's like that differs depending on what types of loans are coming through the door. And so certain relationships that we would make with other referral partners, whether it was a CPA or whether it was somebody that was feeding us stuff, the loan mix and borrower mixtures that were coming in were so different for each one of those. And then we had no idea like how many hours each one is supposed to take, and then how quickly is a processor supposed to get these through the door, and then how many loans do we need to get processors on board? Any of the hiring stuff that we went through, that was one thing that I think because of the speed we definitely overlooked, just because it was again one of those. All right, well, when we get to that point, we'll worry about it, right?
Right.
Like, we'll figure it out when we get there. But then we just didn't have time. It just came really, really fast. So we never really had time to think, all right, well, here's how we need to look at this, or ask questions around like mentors and people like that, and kind of pick people's brains. It was just kind of like, hey, jump into the lava or figure it out.
Yeah,
so,
figure it out.
Yeah.
Yeah. And I think that that's also something that I think is fair. In the movies, it always feels like, somebody's building a business. Like it's always like smooth sailing, right?
Right.
There are no extra hours, and they're always like high-fiving and, and stuff like, right? There's always like, there's usually like a montage scene or I don't know, maybe there's not anymore. I don't know. But, so trying to just, kind of almost being the equivalent of kind of being thrown in the deep end and just saying, okay, how do we figure this out? If you're perfectly on top of things too, I've always thought that was actually a bad sign. Like that's always something else that I've sort of internally kind of gauged within my own business, is that, it's like if you sort of feel like you got all the bases covered, then you're probably not growing.
Yes, for sure. Yeah, absolutely. It's you have to be comfortable being uncomfortable. I feel like, right? Is like probably the best way to describe that. And because if otherwise, you're just being complacent.
Sure.
You're definitely not growing. And somebody else is about to pass you.
Sure.
Even if you are growing, you might be growing slowly, but that just waiting, somebody's right on the edge and they're going to catch you and pass you, and then possibly bury you. For sure.
Do you feel like because your background, I mean, because the way that I knew you before was kind of social media, online marketing. Do you think that helped you at all? I mean, as when you were trying to get business going, social media is kind of an interesting place because there's a lot of noise.
Oh yeah, a lot of noise. I would say not so much. I think my bread and butter would be the paid side of it, right?
Okay.
And I think even the organic side, but the to your point, it's just so saturated, right? So I think the key to us, it has certainly helped since then, right? All of the different marketing strategies, and it helped in the beginning on how to kind of look at a business and look at growing a business, right? Because all of that was pretty much figured out of like, all right, well, once we have a certain amount of revenue, here's what our ad budget's going to be. Here's what we're going to spend.
Yeah.
Here's what we need to shoot for to get each one of those in. Here's what our cost per lead needs to be. All that stuff was kind of already figured out, which was definitely a pressure off the front end. But other than looking and being able to analyze the business as a whole from that lens, I think It probably didn't help too much just because, again, there's so much noise in mortgages.
Right.
Real estate in general, it's just every loan officer, every realtor is out there like, hey, here are the homes I'm doing. Here's the loans I got. Here's the products I got.
Yep.
So I think we focused instead on just the relationship piece and the selling piece and the client experience.
So, and that's a harder way to go, right? I mean, because building relationships takes time. It's a lot easier just kind of doing ground and pound. I mean, if I pound the pavement, if I used to have a few insurance agents, used to talk about that. I know that if I reach out, to X number of people in a particular day, I know I can get quotes from at least X number of people.
Oh yeah.
So that's kind of interesting though, because that is a harder way to go. That's a harder lead.
Yeah. And we primarily just focused on the customer experience. We did go out to realtors and CPAs and lawyers and to kind of craft some relationships as well. But, one of my biggest pet peeves before this was how the mortgage industry was run. And to your point earlier, right, it's typically the largest purchase somebody's going to make in their lifetime.
Yeah.
And also the largest debt that they're going to have in their lifetime.
Right.
So when you combine the two and then treat it like you're a car salesman, right? It's just you come through the door and then just wipe their hands clean.
Yep.
And most of the time, once they get in the door, that person gets handed off to a processor or whoever, and you don't hear from them again ever. That's right. That's until rates drop and you get a little email that's like, "Hey, we got some cool rates for you," right?
Yeah.
And, so I think that was really one of the openings for us that we kind of analyzed. It's like, all right, well, let's treat these people and treat the decision like it's as big of a deal as it is. And, just take the time to educate them if they need to be. If they're already educated, great. If they're not, let's educate them without making them feel stupid.
Right.
And stop throwing a bunch of acronyms their way and, all these mortgage terms that they don't understand. So just kind of normalize the industry and everything, which, I think certainly helped, but definitely took longer. Yeah.
Yeah.
Oh yeah.
It's, and for those of you that are in financial services, I would just offer, this and, James, it sounds like you kind of feel similarly that, relationships still matter. I mean, I think that especially with these complex financial products, I think unfortunately, and I don't even really know kind of how this got to be the way that it is, and I don't just think it's the internet, but a lot of times we look at these financial products as being kind of commoditized. I mean, they're kind of almost the same from one to another. But my goodness, I mean, what a complex thing. I mean, a mortgage is a very intimidating thing. I would offer the same about tax prep for those of my tax preparer friends that are out there. And I would offer the same thing about, insurance and that kind of stuff too. I think it's a pretty intimidating product. And boy, I think that, there probably is a swath of people that would love to talk to somebody about this.
Sure. Yeah. Yeah, absolutely. I mean, it is highly, highly commoditized for sure. It's, but again, I think that, you could look at it of like, well, there might not be too many opportunities and something like that, right? And then we could also look at it as like, well, yeah, it's super commoditized, but that just means everyone's doing the same thing.
Good
right?
point.
And so that's kind of the lens we took is like, all right, if everyone's doing the same thing, there's got to be a bunch of different ways we can skin this cat, right? And do it differently. For better or worse, but I'd rather, go down doing something completely new and different than the same old. So, yeah.
I think, that I used to call it the Old West kind of gunslinger mentality where it's just like, okay, I'm going to take my shot.
Yeah.
And if I'm wrong, I'm wrong.
Yeah.
I think that, especially, when you're starting up a business, I think it's kind of important to just kind of think like you can't be afraid of failing.
Yep. If you want to create the right way, I think you really have to have that mentality because otherwise you're going to fall in the same trap everyone else did, right? You're going to say, well, I need the money. I got to do it this way. I got to, cave and change things just to adapt, as opposed to kind of sticking to your gun and just going for it.
Right. So you're growing really fast. You figured out something about scalability kind of along the way. What about recruiting? Because recruiting is a challenge here.
Oh, yeah.
I think especially right now, I think that's pretty well known. I mean, our economy has just had a shortage of people. So, I mean, any tips? Because, because this is always kind of an interesting thing, because I think especially small businesses, you can't really necessarily rely on your name, right?
Yes.
I mean, maybe to, on the local level to a degree, but you really can't rely on your name. And and your budget is not unlimited either. And I'm not saying that that's true of your larger company. Larger companies have budgets. Mm-hmm. But, if I'm looking for, kind of just the highest pay rate, and you're the small business, chances are good that you're not going to be able to give that to that person.
Yeah. Yeah. I think the current situation in the market is definitely creates its challenges, right? If it's like it is now, you got to think differently. And I think there's a lot of things we did horribly wrong there. Horribly wrong. I think there's also a lot of things that we did that probably worked out really, really well for us. So I'll start at the money issue, right? And that was one of the big things with us is we were doing well, but we also knew like, hey, this is an industry that's heavily dependent on forces outside of us, right?
Right.
If you look at it from the rate standpoint. And so we needed to have some sort of safety net built up, if things change as quickly as they changed the first time. And so we didn't really have a huge expendable budget, a huge amount of money to be able to give to elite talent, especially in the processor side of things, because that was where the biggest hole needed to be filled, so that we could go get more business.
Right.
And so we kind of looked at it from the lens of how hard is this to teach?
Right.
How long is it going to take us to teach someone versus how much, from a money perspective, how much is that going to save us if we bring in somebody who already knows? Right. And, everyone's business is so different. Even if you did have a processor that had processed for another brokerage, it's still going to be different. They're still going to have some stuff to learn. So we stripped kind of all that out and said, all right, here's the layers that it's going to take that we have to teach. How complex is this? And then what are kind of the skill sets of a person that would be good at this, right? So we looked at both people that were good at processes and kind of creative thinkers that could optimize, because we were a startup, right? And so and we had no experience,
right?
So we recognized that the way that my partner and I created things and the processes that we took to process loans and all that might have not been the best way to do it. Right, might not have been the fastest way. There's probably a bunch of different ways that were better. So the first hire that we had, we wanted somebody that could kind of think independently and could kind of look at something and say, yeah, that could be done so much better, and take the time to actually do it and then create the process for it. And so that worked really, really well. But a lot of times the people that look that way, they are kind of slow to react, right? They tended to be, at least in our experience, not the most organized, right? Because they can kind of detach themselves. So they're a little more cluttered in their head and all that. So there were some certain hurdles there that ended up happening. And then on the other side of it, for the next hire, we looked for somebody who was just highly organized, somebody who could just churn these things out. That could also talk to people really, really well. There you go. So we actually found that in a preschool teacher. Somebody who had, COVID was hitting that too pretty hard. They had lost their job. We knew they could. I mean, if you could talk to angry parents of kids, you could talk to anyone on the planet, right?
Good point.
So we talked to him, and he, the challenge there was just teaching them the information of mortgages and processing and all of that was definitely the hurdle there. But in terms of the other skill sets that were already accumulated, it was an amazing move. And the best part about both of those was the pay. We didn't have to pay them nearly as much as we would have if we went with somebody who had a ton of experience. Would it have turned out better? Possibly, right? If you had somebody with a lot of experience, it certainly could have. Because they could have walked through the door with all the processes in place, right? They could have walked through the door and said, "This is how I've done it, and it's perfect." But they also could have come in with a system and a process that was a decade old that is outdated and takes too long now, right?
Well, there's a balance there, right? Yeah. I mean, because what you're hitting at, I mean, I don't think is a big secret. I mean, it's when you hire for experience, I mean, the chances are good that the learning curve is less.
Yep.
But you're probably also paying for that experience. In the United States, folks, we pay for experience.
Bingo. Yep. Yeah. 100%. It's, I think the lesson that I learned is, I think, again, we did some things creatively with hiring, and I think it certainly paid off, but some of the things that we didn't. And I think the lesson learned is just that old adage of hire slow and fire fast, right? It's just take your time. Take your time in the recruiting process. Even if it feels like you're underwater, you just came from 2 months of being underwater. What's another 2 weeks, right? What's another month? You can do that, and it's way more important to do that in the long term.
I think that is very well put. One of the things that I think people underestimate is how long it really takes to recruit. Mm-hmm. I mean, if you do it right, any time in my career where I can tell you where I've actually had to recruit somebody quickly, it actually usually hasn't worked out. If I'm completely honest. Mm-hmm. I think that a lot of times when I'm forced into a situation where it's like, okay, I have to recruit somebody in X amount of time, I'm usually in trouble.
Yep, absolutely. And that's exactly what we ran into. We, whether it was lack of experience or whatever it was, I think we felt a ton of pressure and said, hey, we need to get this done. We need to get this done quickly. And so we relied on speed and kind of had a couple options and really just picked pretty quickly.
Right.
And, which moving fast in a startup is good.
Normal. Yeah.
But, that's just one of those things I think you have to take time on.
So do you recruit then? I mean, I think what I hear you saying, you correct me if I'm wrong. I think what I'm hearing you say is that, personality is kind of maybe more on some level, maybe more important than skill set.
Yeah, for sure. For sure. I mean, it depends on the industry, I think, a lot.
Right.
But yeah, mortgages in particular, it's not rocket science.
Yeah.
It's especially processing it's really taking documents and communicating with people.
Yeah.
Is really, if you boil it down to it, and you have to analyze the documents, but it's pretty much just templates where you say like, hey, here are the things you need to pay attention to and look at, and then here's where you plug it in and how to do it all. So it's really not that difficult. But yeah, personality is, because again, going back to that like customer experience, they have to, not only do they have to vibe well with the customers they speak with, they have to represent your brand well enough, right?
Yeah.
That's a huge piece, especially super early on, because if that's a bad experience and they don't represent you correctly, then it's terrible, right?
Yeah.
And so I think that's good and certainly necessary, but then also the flip side, right? They have to be able to vibe with you as well and the team, and especially at a startup, right? They have to be able to take criticism. They have to be able to just be like, what the hell are you doing? Like, fix this and not get offended, right?
Yeah.
And I think, but then also on the flip side, right? You also have to have some sort of balanced view, right? You can't view them as they're less or anything like that as well, because you hope that they'll tell you, right? If you're being an idiot, you're not doing something fast enough, or the way you're doing it is stupid, right? You would hope that they would tell you that too. So you have to create that atmosphere as well. So yeah, I mean, the person and personality is way more, in my opinion, way more weighted than the experience.
And I don't think that what you're saying here is that the technical skills aren't important. It's that, you still got to be able to execute. I mean, in the end, but the personality and that ability to communicate, I think, is, huge, especially in financial services. I mean, I think, I had a friend of mine that said that, you hire he said you hire the financial advisor, you don't hire the firm. So sorry, folks. No offense to my financial advisor friends there, but
right.
People do work with other people. I mean, and especially, it is, I think, a lot in financial services, it's referrals and it's relationship building a good bit of the time.
Yeah. Yep.
So if you got somebody who can communicate and who can, kind of represent your company well, that's a person to hang on to.
Yeah, absolutely. And especially something like mortgages. And I know obviously it's heavily dependent industry by industry, but in mortgages, you hit on this earlier, people have so much stress around it, right?
Oh yeah.
It is such a grueling process, and it's full of confusion and full of like milestones and dates and all these things that have to be hit. And so, just having somebody that's going to pick up the phone and talk to you when you call, right?
Yeah,
that doesn't have a bunch of meetings scheduled on their calendar, and their whole job is just, when they're not on the phone with a customer, just push documents and push loans through, is huge, right? And so like that's just something small that ended up honestly working out in our favor. We didn't really even think too much about that being able to pick up the phone, but something that worked out in our favor is just availability, right? They weren't afraid of this device and picking it up, and they didn't clutch on to emails and they weren't afraid to just talk to a human. And I think that was another thing that was worked out.
I think that's big. So I mean, you have a marketing background though. Mm-hmm. I'm assuming that you're looking at numbers and metrics and stuff like that. Yeah. Okay. I think it's hard for us, those of you that are out there, you know what I'm talking about. Okay. Yes. Like we always fall back on our numbers. Are there certain things that like you look at and you say, okay, if we hit this particular metric, like this is how I know that we are on a good path? Yeah.
Mortgages is a little bit, it's a little bit of a blessing, and a curse in some ways, but in how long it takes, right?
Yeah.
A mortgage start to finish takes a while.
For sure.
And so it's quite easy to kind of project out the next 3 months of kind of what's coming in and where the holes need to be filled.
Sure.
So that is certainly helpful, right? What do we have under contract? What offers do we have accepted already is a super easy one. How many are out there shopping? Right?
Yeah.
Especially nowadays, right? Yeah. There's way more people shopping than there are homes. So we know that there's a the top of the funnel has a lot of people in it, and we just got to get them through the door. So everything from kind of switching up strategies to one example, calling the listing agents after an offer's put in and say, hey, like basically just reaffirm to the listing agent, like these are qualified people, these are good people, right? It's just kind of something to differentiate yourself with them, and hopefully get that person out at the top of the funnel down to the next run. Yeah.
Yeah.
So those are kind of the two direct sales metrics that we look at. But other than that, because we are focused on the referral side and the customer experience side, we look at kind of that lifetime value of each customer. So we keep track fully of every single customer we've gotten, and then who has referred or who they have referred to us, as well as all of the business partnerships with CPAs and the realtors and stuff. We look at every single person they referred, and then we can kind of highlight key characteristics of each one of those and paint that ideal person, right?
Yeah.
If Jane has given us 20 leads and 20 referrals, and Joe, has given us one, we know we want to try and target a lot more Janes. And so looking at some more of the longer term things have allowed us to pivot away and still succeed in an environment where rates went from really, really low to really, really high, really, really fast. Where everyone else was caught kind of with every other refinance shop was kind of caught with their pants around their ankles. We were able to kind of bridge that gap because the people that refied were still referring us the people that were buying.
Yeah.
Right? So it helped.
Yeah, for sure. What would you, we've covered a lot of ground here. What would you say to somebody who's looking to get out on their own? I mean, you got a lot of people here, they're in financial services. I don't know, maybe some of you tax preparers, it's tax season. Maybe you're like, oh my gosh, this is it for me.
Yeah.
What do you say to them? Any sort of words of advice?
Yeah, I think, it's not as bad as you build it up to be in your mind.
Right.
There's a lot of things in your regular work life currently that are probably going to bring you more stress. It's a different kind of stress, and there's a different kind, but it's your stress, right? It's not your boss's stress. It's not somebody else's demands. It's yours, right?
Yeah.
And I think if that is enticing and it's you want to be the captain of your own ship and in charge of kind of your own future, I think make the jump. Prepare and make the jump. And I think the preparation, again, doesn't have to be nearly as much as you think it has to be.
Good point.
It's just get that minimum viable product. Just get that one thing that you're going to sell. Figure out what that's going to be and why yours is better than somebody else's, and then go for it, right?
Yeah.
And you don't have to jump in off the high 3-meter diving board at first, right? You can kind of check the water, dip your toe in the water and see, right? So even if and it could be everything from just talking to friends and family and saying like, hey, would you buy this? Like, this is what I have. Like, what do you think?
Yeah.
And then talking to random strangers, right?
Yeah.
Even past colleagues, I've talked to plenty of compare.com people when starting this, and just kind of pick their brains on like, hey, this is what I'm doing. Like, what do you think? Right.
Yeah.
And just their feedback, a lot of them, especially friends and family, are going to be like, yeah, that's amazing. Right. They're not going to be honest with you at all.
Right.
So that's why you sometimes have to expand your circle unless you have a really honest father or something.
Yeah. Right.
Who's like, this is dumb.
Yes.
Right?
Yeah.
So, I think getting feedback is going to be a good way to kind of gauge the interest. But even then, a lot of people are still going to tell you it's not that great of an idea, right?
Yeah.
It's not, everybody does that. It's no different than X, Y, and Z. And again, you're in charge of your own destiny, right? So with this, so you can, take what they say with a grain of salt, but then just kind of keep moving forward. And then eventually you'll have some traction. And then I think you got to decide the ultimate question of like, all right, am I jumping off this diving board or not? And then,
Is there ever a perfect time?
No, it's like having a kid. Like there's never, there's never a good time, right? It's just, you go for it. Right?
I always wonder, like, I know that, I think it's really easy for somebody to say, hey, give me another year and then I'll be ready.
Mm-hmm.
I almost wonder, like, especially if somebody says that to me, I'm like, is that ever going to come?
No, never. I think it's more of just an excuse that they tell themselves.
Right.
Right. It's like, well, if I have a little bit more experience, right?
Yeah.
You're not going to learn that much more over that year, whereas if you had your own shop, whatever you were lacking, you're going to learn it in like a week because you're going to, have to, right?
Yeah.
And so especially whenever that issue arises, you're just going to stay up late and figure it out.
Yeah,
you're
for sure.
going to pull the hours and you're going to do it because you have to. And I think that's the best part about a startup that people don't really think about. It's like, well, you're not that 9-to-5 job anymore. You're not all right, well, I have X, Y, and Z to do still, but end of the day, I'm going to go home.
Yeah.
It's, you're going to figure it out, whatever the issue arises, because you don't have a choice.
Right.
And so it's, if a lion's chasing you, you're going to run your fastest race ever. Right.
Yeah. Right.
And so I think it's similar. There's never a good time. You just got to go for it.
Yeah. So folks, if you're out there, if you're thinking about it, okay, and I don't even really care, kind of what industry you're in or what you're thinking about. There's never a perfect time. If you're feeling it and, if you're saying to yourself, hey, I'm going to wonder if I could do this, like I just don't want to get to the end of my life and sit there and think like, hey, I wonder if I could have. Give it a go. Yeah. So I think that is something to just to think about.
For sure.
James, if folks would like to get a hold of you, how would they be able to do that?
So you could email me at just james@brightleafmortgage.com, or check out our website, brightleafmortgage.com, or Google us, look us up, Facebook, Instagram, wherever. Yeah.
So James Goodwillie, folks, has just given us I think just a lot of great insight here. On just what it means to sort of really build something from nothing. It's different when it's your money, folks. It just is. And so, so anyway, James Goodwillie, co-founder of Brightleaf Mortgage here in Richmond, Virginia. Thank you so much for joining us here on Accountable.
Thanks for having me.
All right. Thanks so much, folks. We will see you next week on Accountable.